this money machine. Scalping seconds, slicing fast. Ride the wave, don't let it pass. Green and red, they set the tone. Win or lose, I'm in the zone. Trade the dots, connect the line. Profits calling, it's my time. Precision moves, sharp and clean. Living life on this money machine. Every tick's a heartbeat loud. High stakes play, I'm feeling proud. Risk and thrill, it's all the same. One more trade to up my game. Pivots turn, I'm locked and sure. Cut the losses, keep it pure. Every trend, I see the clues. I'll ride the highs and dodge the blues. Trade the dots, connect the line. Profits calling, it's my time. Precision moves, sharp and clean. Living life on this money machine. Market, ooh yeah. We the market.
Good morning, guys. Good morning. Good morning. Good morning, everybody. Um, the name of the song is called Funky Market. It's our own proprietary song that we made ourselves with AI. So hopefully you guys like it. Come listen to it every day. Hi, guys. I got so much cool stuff to show you today. I'm going to repeat all of this because a lot of people are going to need to hear it over and over and over again. Um, So, first of all, good morning, everybody. Who's new in the room? Say yes to me. I need to see 3 new people in the room before I um, start telling you all the setups that I want to share with you, including the foundational setup that we have working here. Tell me new. Just say I'm new in chat. I'll wait until I see 3 news in chat because I want to really set this up for you guys. Hopefully, you will really like what I have to show you. Wildman new. Omar new. You guys are all lying. You guys are all lying. Everybody, nobody's new here. Sean is new. Nice. Okay. All right. And Gabriel, you just hit the like button. Nice. Okay. Thank you. Cleverly new. Nice. Nice to have you here. Nice to have you. All right. Okay. So let's build the foundation for what we do here so you guys can understand. And then I'm going to show you. It's literally like Lego. There's 1,000 things we can do with the Christmas dots that you guys are going to love. So the basic idea of what we have on the chart is a 200 period two-minute chart. We're always scalping the short-term trend. 2-minute chart, 200 period SMA, which is this long function, and the 8-period SMA, which changes slope depending on whether it's positive moves or negative moves on the short-term basis. It goes from green to red. That's the 8-period SMA, okay? All we need to kind of orient ourselves is where is trend. If 8 is below 200, trend is negative. If 8 is above 200, trend is positive. Now, within trend, there is a trend moves, which are like if you're a positive trend, the green Christmas tree signals are buy signals. And there's counter trend moves. If you're above, the red ones are counter trend moves. If you're below, these are trend signals, right? Pretty simple. Pretty simple as far as the structure goes. Now, yesterday I showed you guys the absolute money setup, the 95% accurate. I mean, I'm lying. It's not 95%. It's probably 87%. But it really is way above 85% accurate setup, which is really clean and simple. We have crossing of the moving averages, and you're looking for the second, not the first, but the second trend label, which in this case would be this one. The only thing, obviously, today, which is it's a bullshit example, is because this was news, so you wouldn't have taken this anyways. This was not a simple. This was not a trade you would have taken because it was right in front of news. In this case, actually, news worked in your favor. But assume there was no news. You're always taking not the first, but the second sell signal, because the first is kind of like, maybe we're in trend, maybe we're not in trend. The second one really confirms that there's a trend move. Boom, you take that and you're good to go, right? That is a trade that is money almost all the time for the short-term scalp that we do. With NASDAQ, for example, right now, it'd be about, five target, 15 stop. We're looking for just, small amount of high probability scalp. The trade obviously works the exact opposite way on the upside. The thing about the upside is that we just had pure upside all night long. There was like literally no break to the upside, right? So, I mean, we've been in an uptrend for the last 24 hours. But just to show you, when do we break through the uptrend here? Just to show you to go backwards. Here we go. We break the trend this way, not the first, but the second. Boom, money. That is the money trade. Okay. So the great thing about this is it's super accurate. The tough part about it is that it's you could have like literally a day of no signals because the trend is just continuous, and you're riding the pony, right? So um, that happens. It doesn't. It's pretty rare. Yesterday and today was a really really strong trend day, and you could have done a million other things that you could have traded inside of it. But um, yesterday I also introduced the concept of a retrace trade. A retrace trade using the opposite color Christmas tree signals as a trend-based entry. So like just for example, what I mean by this is we're downtrend. You see trend is down. 8 is below the 200, so it's a downtrend. So a green label is a sell signal. That's a retrace sell signal. You would sell it over here, right? You would sell it over here as a sell signal, and you could make money. And in an uptrend, like for example, an uptrend like yesterday, if you just wanted to do nothing but try to collect as much quick scalps as possible, all you have to do was literally buy every single red label, because you're buying down in an up market, buying down winner, buying down winner, buying down winner, buying down winner, blah 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 blah, onward and upward and upward and upward and upward and upward, right? But that also, first of all, they can become, for those of you who are not interested in trading continuously, they can be tough. It can also become very tedious because you really you're going to do a lot of trades, and of course you got to win 4 out of 5 to stay net positive. So it creates you really want to have an extraordinarily strong positive trend, either upside or downside, to be able to profit all the time from buying the retrace trades or buying the breakout trades, right? You could probably trade both. I remember Ali was saying yesterday it was such a strong day that you literally had 21 winners in a row, which is great. Wally, the wealth charts, I can't promise anything because I don't make wealth charts. I think realistically maybe a week on wealth charts. I'll speak to Rob as soon as I can. But he's doing the wealth charts summit, so he's kind of busy. It's not up to me. That's why I always say use both. Use TradingView. I control TradingView. I don't control wealth charts. So nothing. I've given them the code, but it'll take however long it takes because it's a lot of code they gotta integrate. But be that as it may, so you could do all these scalping, but then there are a lot of people in the room that really want to trade trend. Like imagine if you could buy here and just hold it, and sell over there, just for shits and giggles, or you bought at 1 o'clock in the morning and you held it all the way till 5, 6 o'clock in the morning for a 200-point move, right? Blah 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 blah. Wouldn't you like to do that, right? Wouldn't you like to trade in the direction of the long-term trend without any limitation? Do you guys want to hear how I have a solution to this? That's really interesting. Using the scalp labels. It just it hit me as I was working on all of this retrace idea. So I'm going to go and show it to you from the short side, because we're now on the short side, and then I'll show you how it works on the long side, and then I'm going to show you how I consider, what I would do, how I would run this particular strategy on a dedicated account. And by the way, going back, who here does not have an Apex account? Who here has never traded futures? Let's do this. Actually, let's do this. I want to do a poll and see. The answer here needs to be I have never traded futures. Oh, shit. If I could only spell. Or prop. And I want to Only yeses. I want only yeses to this prop. I want to see how many people are new, because this is really what it's all about. It's about teaching you how to do this in a safe, secure, totally risk-controlled manner, where I guarantee your losses. I guarantee your losses, because you cannot possibly lose more than the $33 that you spend on the prop account, which is something you cannot ever say when you trade your own money. That's the incredibly powerful part of trading props. So that's why I want to know who has never done this, so that you can understand. So if you've never done this, your first order of business is just simply go to my friends at Apex. Let's go over here. I'm going to show you how to do this. I put the link. It's pinned. It's pinned to the thing. Don't even think about it. Don't worry about what you're buying. Don't worry what you bought. Nothing bad is going to happen to you, I promise you, if you buy this account. What it's going to do is it's going to set you up for the ability to learn. Okay, let me just, and they're always going to ask you for authenticator. Let me just see if I get my authenticator. 308193. 308193. Okay, all you need to do is, if you've never traded, go to our friends at Apex, because they are super, super, super cheap. You're never going to find anything cheaper in your life. And you can buy wealth charts, or given the fact that it's going to take maybe a day or two for us to update wealth charts, maybe a week, it's probably better to buy the Trade-Evade, because then for sure you're going to be able to have the indicator that I show you. Buy the 50,000. That's my recommendation. That's the best account that you can get. And when you buy it, what's going on here with my internet today? What internet am I on today? Oh, wow. Okay. Make sure you just do one thing, which is you say BK save, and you will be able to have the biggest discount possible. If you don't say this, you won't get the discount. That's really going to suck. But if you say BK save, you press the button, the $160 charge suddenly becomes 37 bucks. That's it. Get the account, and then at very minimum, you have like 3 weeks of trading before you blow it up. And if you're doing really, really well, you may actually even get funded, and that'll be awesome. But that's not the point. The point is that by getting involved, by learning how to trade futures, by learning the platform, by learning how to execute, you are going to get yourself on a path towards being able to trade the markets without any financial risk. All right? The money you pay is the only money that's at risk, which is amazing, because if you put your own money at risk, you're going to lose it all. That's always how it works. It's the law of life in the markets that you lose all your money the first time, the second time, the third time, and if you're lucky, by the fourth time, maybe you get to keep your account. I don't know. I literally don't know a single person that has ever traded futures, including yours truly, that has not lost their first 3 accounts, which means you're probably down $10,000, $15,000 before you even begin to understand how the markets work. Whereas here, it's just 37 bucks to give it a shot, which is ridiculous. It costs more to get breakfast and pancakes in New York these days. Anyways, so I totally got off tangent about it. What the fuck was I talking about? Oh, so how for those people that want to trade the long-term pattern, right, with this particular indicator. Let me show you how this works. We're downtrend. We're downtrend, right? We're going to enter on the buy label over here, right? I'm actually we're going to enter on a buy label over here. I'm actually kind of not properly positioned on this setup. I have an entry over here that's really not legitimate, but I'll show you. Let me actually, you know what? Let me show this to you on the long side, see, because I don't have enough price action on the short side to really give you an idea. I'm gonna here's the rules for how to really create a great trend-based structure. You get a green label you enter on the red. I'm buying on the red because it's positive move, right? It's a positive move. The next, unfortunately, over here, the next red signal, I sell. I sell at the next red signal. So in this case, it's pretty much I buy it, I make a small loss. New green label. I need to have a new green label. Then I have a new red label. I buy on the red label, and then I sell on the next red label. The idea is I'm going to buy the dip and only sell when I have a weakness. So in this case, I'm long 607 and I'm out 629, right? Next time I buy over here, I sell here, small loss, right? Next time I buy over here, I sell over here, flat. Next time I buy here, sell over here, I'm flat. So you're just basically doing lots and lots of flat positions in a longer term structure. But this is obviously all Asia. But if I were to do this yesterday, in how we were trading yesterday, you can really see the P&Ls. So green label, this is a same thing as a green label. We buy here on the dip. I sell over here, right? So I'm long here at 84. I sell at 97. That's a like a 15 point win. Then I buy over here at 508. I sell over here at 516. I buy over here at 506. I sell over here at 529. You see how it goes? You're basically just making 20, 30, 40 points on the positive legs and maybe 5, 6 negative points on the negative legs. Yeah, it's very simple. Makes a lot of sense. And if you have a long durational trend, it's a great idea. Now you can tell me, how come why don't I buy on the buy label and come in? Well, the reason is because if you're in buy trend, if you're in a positive trend, buying on the sell label gives you the cheap entry, usually the cheapest entry possible. And as a result of that, you're coming in very cheap and only exiting when it goes against you. Now, unfortunately, there's no way to ignore the false exits. Like, this is a false exit. You're in here, you get a red label, you kind of have to take the trade if you're going to honor the process, right? And it's unfortunate because if this didn't show up as a red label, you'd have made like 40 points here instead of 20 points here. That's just nature of the beast. But it's the best of all possible worlds in terms of being able to come in. Like, for example, you buy over here, just to serve a good example. All you need is 1 or 2 of these massive legs. You buy at 403 and you sell at 489. That's an 80-point gain. That's the one big gain of the day that you're looking for, that you cannot capture any other way except through this process. And that's what makes this so good. It's a very low risk process in terms of all the exits because you're going to be out of position right away. But it's a great idea to capture trades if it goes the other way, right? So actually, if I'm going to honor my whole position, if I'm on the flip side, I've shorted the buy. I have to exit on the next buy. I'm going to exit over here. It's a tiny little loss for me. I have to exit on the next buy because a buy on a short trade is a counter signal. It's telling you that the market is not cooperating with you. You want to see just reds, right? So the first buy label is an exit label, right? And so be it. We also have like 5 minutes to the open, so everything comes up on the open. So that's a really interesting way, and we will weave this in all week long to participate. No stops. That's right. You have to trade it very small size. For example, I'm only trading it with 1 micro on a 25,000. So in the worst case scenario, I mean, I suppose you could put a 100-point stop, like a 200-point emergency stop if you wanted to on the position. It's probably not a bad idea, just in case there's some kind of a news bomb or something else. But generally, your stops are going to be 5, 10 points. If the price action goes against you, you're immediately going to get out of that. The green label. Like if you I came in here at 604 and came out at 606, right? That's hardly any risk. You see what I'm saying? But you're right that if we're going to practice good trading habits, we always have to assume the emergency situation, which means that you probably have to, probably should run a 100-point stop on the condition, right? Right. So that's not a bad suggestion, Claudio, as far as that goes. So the last thing that I wanted to, share. So we have like, hey, let's do the first high probability trend trade of the trend move. We have the retrace, trades that we can do, and then we have the actual no stops. No stops, always in market trend thing that looks basically for that one or two really big breakout moves during the day. That basically breaks even, and then captures big ass moves all day long, which is a very, very attractive way of trading, especially if you're doing it small size. You don't have to, you never have to increase sizes. You don't have to ever chase anything. You just simply calmly trade throughout the day. And there's always going to be one or two really big moves during the day. So that one big move just literally pays for all your small losses and then some, and you just capture a lot. I mean, it's not at all unrealistic to trade a $50,000 account with a mini on this, because you're not going to do any more size. And I mean, I suppose, if you had $100 stop, which on an emergency, there is a possibility that if you had traded a mini and you had a 100-point stop on some kind of news, you'd blow the account at minus 2,000, pretty much blow the account. But on the other hand, if you captured 50 to 80 points of movement, you're really, you've done like, what is that, 80 times 20, $1,600 in a day. You could get funded in 2 or 3 days on that kind of a structure without, without ever increasing your size. So that's kind of really cool as far as the setup goes. But then the final setup, and the one that I really like because so many people, I think, responded so positively to what I call one-a-day setup. And the one-a-day setup is something that we're going to be watching for after the 10 o'clock hour. And that's simply after 10 o'clock, what is the trend base? So in this case, trend is negative, which means we're looking for the red label. We take the first red label after the 10 o'clock hour. If we're still negative trend, if we're positive trend, then we take the positive label for a one and done. And that is usually a very, very high probability, because trend usually always has big momentum at the 10 o'clock hour. Yesterday, it just took us forever. That trade worked, but it was literally 20 minutes of just tedious, boring waiting for that trade to kind of actualize. But then the exact same trade. So this trade appears twice in a day, 10 o'clock New York and after 3 o'clock New York. And yesterday, if you guys traded the 3 o'clock hour, it was super easy. It was like an easy peasy trade. And I will add one more time of the day, especially for those of you guys who are in Europe or in Asia. The other great time for a trend-based Christmas tree label is 3 o'clock in the morning New York, when Frankfurt opens up. If you can find the trend-based structure, then you have a really high probability of getting it. So basically, you kind of just simply do 3 trades a day, you're done, or 1 trade a day and you're done. It's really, really good. The success rate is 8 out of 9. So if you just do 1 trade a day, 20 days, boom, at one contract, you could get funded. It's just kind of a low stress, low activity way of trading, which a lot of people really seem to like, because it's not, it doesn't require a lot of time. It simply requires a tool and the structure to be able to trade it. So we will, we will wait for the 10 o'clock hour to see how that sets up. And in the meantime, I'm going to try and trade the continuity, the always in trade when we have it. So like the example that I want to show you is we have a negative trend, right? Market is below. We have a red label. This is actually an orange label because it tells you the volatility of this candle is huge. If we were to sell this candle, this is a good example. One of the cool things about this indicator is this tells you that we needed to sell this particular trade if we were going to do it with a 45 stop and a 15 target because of the volatility of this candle was more than 30 points. So if we had done that, actually, we sold 88. I don't know if it made 15. I don't think it made 15 quite yet, but you would have had 45 to 15 as a target. At least it would have told you, don't put a too small a stop on this because you get stopped out because of volatility. Or you could just simply pass up the trade as I did today. What is the exit on that? Sorry, what's the exit on what, Claudia? Oh, when there's no stops, the exit is a green label in a. So you enter on a green label, you exit on a green label in a downtrend. In an uptrend, you enter on a red label, you exit on a red label. Oh, the one and done is depending on the volatility of the day. Generally, it'll probably be 10:30 because the volatility is going to get up to, like, right now it's we could probably even at 30 points, it's not really a very high volatility. When it gets up to like when it gets up, I guess at 30 points you could do 10:30. I guess it'll still be 10:30. If it's 20 points, 25 points or less, you could do 5:10. At 30 points, it's enough of a range expansion that you could do 10:30. But it's kind of thin. I would actually probably do 5:15 on this because it's all contingent on how quiet a day it is today on the one and done. So, by the way, the same kind of idea of like, hey, let's trade trend, a continuous trend, right? We call this, let's say, scalp continuous. Also applies to gold, right? I mean, we could do this with gold too, right? If you guys want to do this, -1. So here's a red label, green label. I'm going to get short this thing without a. I want to. Sorry, I'm selling because I don't want to do it with a stop. So I'm short this, right? And what will take me out of this trade, out of this gold trade? A green label. If I get a green label, I'll take myself out of the trade. Am I on? Okay, yeah. I'm just trying to figure out. I wanted to make sure that I was on the right size. So gold, the thing about gold is gold has been really, really trendy last couple of days, but now it's kind of choppy around the 200 SMA. And if it gets whipped around the 200 SMA, it's going to just whip us around on exits and, we'll maybe -3, -4 before we can catch any kind of a big trend. But if you're trading small size, none of that really matters, right? That's the whole point, is none of this really, really matters, right? Although this one is just breaking out for me right now, and I'm eating the move. But I'm not going to exit until I see a second green label on gold. So we'll leave gold alone here for the time being. Let's go to NASDAQ and see what it wants to do. So NASDAQ, just let you know, did eventually, I think 87, did eventually make that 15-point target. So you could have traded that. The orange threshold for me on Christmas tree, I believe should be. So you have to go into the Christmas tree label. No, this is actually it's too tight. The tick threshold should have been 120, right? 30, yeah, 30, 120. Yeah. 606.86, right? It's 30 points. It actually did not it actually just missed it, right? 606 to 86, just 30. Huh. Maybe I should. I'm just wondering if I should probably make it. See if I make it 19. I would make it 119 just to be precise. Let's see if that turns it. All right. Why is that not turning? I 606. Oh, is it? Oh no, it's 20 points. I'm wrong. This is not. This wasn't a big candle. This is 20 points. I can't do the math. I'm like, how come the computer is not doing this for me? It's only 20 points, which means you could have traded this with a 1030. This just looked a lot bigger on the screen. You could have traded this with a 1030, and you would have been fine. This would have totally made 10 points for you. You'd have been totally fine. All right, we are. And you see, like, yes, it's obviously frustrating, but if you came in short here and kind of forced yourself short over here, and you could have been really deep in the money on this, continuity trade, it's not going to catch it perfectly. There's nothing that's ever going to catch it perfectly. But on the next one, if it comes in green and then it drops down, let's say we unwind. Let's say this is just the start of maybe a 300-400 point unwind. We will catch that big move. Just have to be a little bit patient, right? It just, the nature of the beast that you can't. If somebody thinks of a better exit strategy, I'm happy to entertain it. But you have to. The point is, you need to exit when you're getting the flow the other way, even if it's sometimes a fall exit. So we're trading a lot of different ideas. Not really trading anything this morning yet because nothing is setting up. I'm trading the continuous flow trade in one account on gold here. Oops, sorry. Yeah, in gold, and if it turns green label on me, I will flip myself out. Although honestly, if you look at this, if I'm looking at this kind of objectively, I'm always supposed to trade trend, and I started out trading negative trend, and we actually broke into positive trend. We're an uptrend, right? So I really should be, the moment it becomes different trend, I should probably just simply close this out, which I think I will. I'm just going to close out this position, and then see if I get a positive trend signal, and then trade it the other way. I think the other condition here that you have to be mindful of, the whole idea you started this trade was because you were looking for a negative orientation, and since you didn't get it, like for example, here's you would have bought here at 29, you would have exited here at 34, 5 points, nice and clean. You'd have had perfect trade here because you were consistent to the trend. Now the trend is positive. I mean, gold is just a really tough trade now because it's had this huge big move. Now it's going to be very consolidative. All right, so 10 minutes to the open. 10 minutes after the open, the markets actually had pretty good news today. Retail sales was stronger than before, which I think kind of shows. I'll be right back, guys. I think shows the very fact that while the consumer may be bitching sentiment-wise, it's consumer still has money, right? We can look at consumption here on TweetDeck and see what they did, but generally, it doesn't feel like the economy is crashing just yet. So if you guys follow Zero Hedge, and you see them referring to, oh, Robert Redford died? Wow. Oh, that's kind of sad. Wow. It's so funny. Yesterday, just yesterday, I went down the rabbit hole of watching 3 Days of the Condor, which is a great, great spy movie of the 1970s. And oh man, you guys got to watch it. It's actually all shot in my neighborhood, exactly where I live in New York City. Um, and it was just really, really interesting because that movie was just so much tension on that movie project. This whole video was all about um, how much paranoia there was in that movie, and how good. Wow, too bad Robert Redford passed. Anyways, what Zero Hedge is referring to here is there's three big high frequency trading companies in the world: Citadel, which basically executes everybody's retail orders; Virtu, which kind of does the same thing, but they do a lot more in the futures business, and the forex business; and a company called Jane Street, which is the most notorious of all, because what it likes to do is it likes to manipulate prices. So what it typically likes to do is likes to bring prices down in the underlying market, like let's say in the stock market, and then buy cheap options and then ramp everything up and make money on the options. They love to do this. They got very badly penalized for that in the Indian market. In the Indian market, the options market is 400 times as large as the underlying cash market. So they just did this all day long, where they would bring the cash market down a couple hundred points, buy cheap options, and then really roar the cash market higher. And so all of those options would go in the money, and they get paid out millions of dollars. The regulator really came down hard on them. But in the U.S., they keep doing the same thing in a more, I guess, subtle fashion. So they were talking about basically, oh, they're gonna pump it down, sell all the ETFs, and then bring it back up as the day goes by. The really cool thing about the DOTS indicator is that we can catch their moves. They show up on the charts here with our signals, so it's not like we're trading blind. All right, we got nothing going on over here. It's very, very quiet. Tomorrow, just to let you guys know, tomorrow Kathy is going to be doing. Okay, so sort of like here's the classic churn and burn in gold, right? We're positive trend. We're positive trend over here. I'm going to do this again. Painful as it was, we took a little bit of a loss. I'm going to do it again because remember, this continuous all-in structure, you have to be prepared. In our other structure, we win 8 out of 9 times. In this one, you could lose 4 out of 5 times, but the 5th time you win, you make it all back and then some. It's just a different orientation and mentality of how you have to trade. You have to trust the process, and sometimes the process will take you by your tail. It will just make you wag it and wag it and wag it until you're exhausted, and then all of a sudden, boom, it'll make the whole thing go. So like right now, we're positive trend, red label. I'm going to be a buyer here, and if the trend evens out and begins to stay positive, actually, it's not even letting me buy. I will hopefully be able to to capitalize on a big move up. All right, let's buy. All right, bought this at market, and now we don't move until we get another red label. So until we get another red label, or we get whipped out again by the moving averages crossing down and going negative trend. One or two of those conditions is going to take us out. But now We just basically bet on the fact that the market turned positive, and we're going to try to ride this pony until we get a second red label, a sign of a sell-off, right? So now we're long a little bit of gold. So very, very different orientation mentally than the other way we're doing it. We're doing high probability, high success, high accuracy. This is sort of low probability, low accuracy, but high reward, right? I mean, if this thing goes to 45, we're like 10 points in the money, right? That's really, really, really huge. Or if you're a pure degenerate gambler, you could just take profits now. It's up to you. There's a lot of truth to that, Jason. Like, it's really sort of, has the market discounted everything? Remember, markets move on surprise, right? If the news is known in the market, it's very unlikely the market is going to move unless the news is known, but then the market says, oh, you know what? This just confirms that the future is going to be even better than I thought, then I'm going to buy it. Or maybe the future is going to be even worse than I thought, I'm going to sell it. But generally, when the market knows what is about to happen, there's little dislocation. So, like, for example, right now the market is pricing in 25 bips. But there was a big trade that I posted on my Twitter. They went off the Chicago Mercantile Exchange and the Fed funds futures rate, like a really 4,000 contracts, which is a massive amount of money. That means somebody may be betting on a 50 basis point cut. I don't think we're going to go 50 basis point cut because the Fed is so politicized that if we were in the midst of a Great Depression, they'd do a 25 basis point cut just to, what's the word I'm looking for? Thumb their nose at Trump. But there's possibility. There could be a possibility, and if that's true, if we do surprisingly go 50 bips, then yeah, we're going to have a massive move tomorrow. It's unanticipated. But if we have a 25 bips, you're right. The market has been rallying into it. It's very, very likely that we're going to sell off tomorrow. We're going to trade the close tomorrow. We're going to trade 2 o'clock onward. I'm going to trade with you guys the FOMC. There'll be no trading in the morning. We're going to trade the FOMC at night. It's going to be a lot of fun. So hopefully you'll enjoy it. So where are we? It's 10 of 10. Things are kind of very, very quiet. Price action, not really doing much. What's the high on gold? Let me see the total high. I'm actually curious. I wonder. The key thing is, does the U.S. session? We didn't take it up to. They didn't take it up through the 45. I'm just wondering. My key thing is, can the U.S. session run gold to 750, which will be massive? And obviously, if we get to 750 off this move, that's going to be a huge, huge trend move that we're able to catch. I'm not holding my breath, but it's nice. It'd be nice to do that. So kind of like, I think, to show you visually, I wonder if I could do this. The way you do this is we kind of trading, making a little bit of money, getting small stops, and then you get this big, big, big move. We're in over here, and we don't exit till over here. And that is what creates that 1 or 2 a day big profit, right? Everybody sees sort of like, we follow the tail, make a little bit of money, get a little bit stopped out, and then just this big, big continuous move is what we love to catch. We can do that. That's the payout. If you can do that two times a day, sometimes you can get a big move 2 times a day. Those are 2 really big payouts. That's what you're looking for in this version of the Christmas tree trade, which I think a lot of people kind of like, because there are people who like to stay in trades for much longer than just the short scalps that we like to do, and this gives them a chance. And the thing is about this kind of a structure is you can kind of trade it almost any time of the day, because frankly, yes, big moves generally happen during North America and during Asia, but not always. And you never know, like when the big move happens. So yes, today, right now is the proper time to trade the big move, but it could have happened in Europe. We could have had big moves in Europe as well. Oops, sorry. Let me get rid of this. Oops. Like, even these moves were pretty good moves. There's like 50 point moves over here, right over here. But am I trading Asia today? Yeah, I am going to trade Asia today. This week I will be trading Asia today. I'll post the numbers. Let's see what NASDAQ wants to do. NASDAQ. Ooh, what do we have here? Okay, we have a sell signal. It's not 10 o'clock, unfortunately. It's a very kind of a funky day today, right? So we're negative sell. I'm almost like, do I want to take this trade? Let me go. I want to change accounts. I want to change my accounts to this one. Like, it's early, I really, 67, 27. So this is a 30-point candle. That's interesting. You know what? Let's do this for, we're going to sell this for 15. I'm going to sell this for 15 points. So I'm in this trade at 39, and I want to be out at 24, right? 24 at a 15 point target and a 45 point stop. So 39, 79, 84. I'm around there. It's a big stop. Okay, so I'm going to give myself a big, nice wide move. This is not the 10 o'clock trade that I really wanted to, but it's kind of, it's a really weird day today. I think it's, pre-FOMC day. This is in trend. We are in trend. The orange label tells me that this is a big volatility candle. I need to expand my stops and targets if I want to give myself a reasonable chance of success. So basically, I'm short 39s, targeting 24s with a stop at 83s. Right? It should be 83, whatever. 83. If I'm up there, it's it's a problem, right? Everybody follow what I'm doing? Everybody guess what I did? So 40% of this group has never traded prop. 40%, as I was telling you guys. I'm going to end the poll. So the easiest way, as I said, simply go to Apex and use our code. Let me put the QR code is in for anybody on Twitter is on the side here, and everybody who wants the QR code, I also pinned it over there into the thing. Just simply, my recommendation, you can buy it at 25, but I really recommend you buy it at 50. It's the best account, and it's literally 30 bucks. And it starts you off as somebody who's a newbie. Just make sure you put in the word BK save. Oops. Hit this and and buy the account. And it goes from 187 to just 37 bucks. That's the best thing you can do. So go out there, go do it, and then you're able to trade along with me, learn along with me, and have a good time without ever risking your own money. So I'm sitting here at 50, 24, 25. See if we can make this trade. Ah, man. And we're done. And that's like I wish I could tell you this was my one a day trade. It's really not. It's supposed to happen after 10 o'clock. So maybe at 10:30 we'll still get it. We'll still get a good setup on this whole thing. But we take what we can get. It's within trend. We used the proper volatility wrapper, but we gave ourselves the right thing because the indicator told us how much volatility there is in the trade. And we got it done. So not bad for government work. In the meantime, I'm in the other account. I'm still in the gold trade, and the gold trade just keeps going until I get a red label. And if I get a red label, then I'll come out of the gold trade. Oh, God, man, I'm sorry, guys. Here's the other account, and we're just holding that trade and just letting it trade until we can get out of it. Everybody vibing what I'm doing? Yeah, it's independent. Christmas retrace is everything is baked in. In other words, the label is the signal. It assumes all the slope and everything else. Yes, it's just I think it's a better shortcut to what we want to do, right? Because it shows you visually in just one single visual cue what it wants to do, and then you don't have to do anything else. Like right now, sort of, if we're gonna play this trade. If this thing, like for example, if this thing we get a buy Christmas tree label, that's a retrace label in a downtrend, right? Let's go. Just forget gold for time being here. Just focus on this. If I get a green label here, right, that gives me an entryway into the trade. Matter of fact, why the fuck did I come out? Guys, what was the reason why I came out? Oh, because I was here to here. That's what sucked. That's right. I was short here, and this one forced me out of the trade. Because if I didn't have it, we would have been short here at 608 and just nursing this thing for almost 100 points of profit, which unfortunately, you don't get it. Like I said, it's the best of all the other setups. In other words, it's never perfect. It's never going to give you that perfect, oh, I caught the huge big move entry, but it's generally going to give it to you. And generally is the best we can do in trading, right? If I could come out with a strategy that's perfect, we'd never have to work for a living. But having a general idea of coming in really gives us, maybe we won't get the 100-point move today, but at least we'll be positioned properly to take advantage of it. But it's definitely very, very quiet. I was going to say I wanted to look at investing live. Wait, where am I? No, that's not what I want. That's not what I want. Is this what I want? Yeah, okay. TikTok goes to US. That's good news. I'm just trying to see if there's any commentary on the retail sales here. Pretty positive. Nothing much to say, but pretty positive. The Christmas indicator is better for the Apex account. Yes, it's well, all the indicators are designed for TradingView, TradeOvate, Wealth Charts, which are all Apex-driven accounts. They're designed for futures trading. Although, tonight you're going to see me, if those of you guys who trade CFDs, we have a CFD version of all of this that we can trade. But they're designed for, for trading futures, and they're specifically designed for NASDAQ and gold as really good indicators. I'm just curious. A lot of people always point my direction to the Dow, so I'm just curious. I'm going to put the Dow on here just to see what would the signals be, where would we be on the Dow structure, right? So this is a really good example. Like in this particular case, right? And it's I'm the first one to say it's a woulda, coulda, shoulda. So I will be the first one to admit this is kind of bullshit play. But how would we play this? We short here at 205. Now with the Dow, obviously this is just insane. You have to give it a lot of room to run. But you wouldn't step out because the moving averages still stayed below and there was no green label, and you would have still been in this thing from 207 all the way down to 65, like a 200-point move, right? But with Dow, you really absolutely have to have big moves. Here you would have been in here, out here, in here, out of here, out of here. You probably most realistically you wouldn't have taken this trade because you'd have been short here at 250 and out here at 201. Nice 50-point move. So yeah, this could totally be traded, on the Dow function as well. So it's gold, very, very quiet, right? And we're basically, we are long gold until we see a red label, and then we're going to exit gold. Okay, we're past the 10 o'clock hour. And do we have that, officially we really took the one and done trade here. That was the one and done trade. But if another one shows up like at around, 10:15, 10:30, we really would have to take it as part of our procedural. But today, you guys can see it. Very, very quiet, very little signals because we're in pre-FOMC stall mode. All the action is going to happen tomorrow. Definitely come trade with me tomorrow at 2 o'clock in the afternoon if you can. And, we'll have the usual. We have the trading, the price action, everything else that we can do. Yes, so my stops and targets are like usually 10:30, but when we adjust for volatility, there would be 15:45, right? Because in this case, we did a 15:45. And if it's super, super tight, I could do a 515. 515 is probably much more for European session trade than it is for any other time. Just switching around between two very boring price actions here. What'd you guys trade today? Anybody trade well in gold or Nasdaq in the overnight? Timothy, the way you would set up the orange label, right? Let me show you this. Actually, it's so boring. We have like plenty of time here. Let me show you some tricks of trading view, right? So first and foremost, let's set up a template for NASDAQ. I'm going to show you how I set up my template. We're going to go into settings, right? And we're going to leave everything alone. The only things we want to set up is the range tick thresh, sorry, the Christmas tree label for orange highlight. And what that is to me is it's got to be more than 30 points. If the candle itself is 30 points, which is 120 ticks, I do 119 just to kind of give me 119 just to give me you know, like a little granularity. This is going to turn my Christmas tree label orange. That's what that says. Is the candle itself? The candle itself is 30 points or more. So I have to have wider stops, right? Because my stop generally is 30. And if the candle is more than 30, I really need to have a wider stop. So that's number one. I would set that over there. And then I want to have the range for the minimum and the maximum breakout. And here it's actually these are all badly set up. So what this needs to be done is the breakout threshold for range, probably like 40 points. Like if the hourly range is 50, probably 50 points. Let's say 50 points. That would be 200. That means that the last hour, the range was 50 points or more. So we want to be in that range. And then the minimum range that I need, I cannot have a range less than 15 points. So it's got to be 60. And if it's less than 60, it's going to turn everything into red. And I'm going to say okay, right? So here you can see 86 points. It's in big breakout mode here, big range, all that stuff. Now what I need to do is I need to go over here and say save indicator template. And I'm going to save it as my NQ template, right? NQ range template. And say remember symbol, remember interval, blah blah blah, save. And now and say overwrite, says yes. And now all I need to do, let's imagine I'm on gold, right? I put gold. If I go to my NQ range template settings, it's going to be the settings that I want for NASDAQ, right? It's going to set up that range settings for me. So that's the settings for NASDAQ. And then if I want to set up settings for gold, and here's for gold, we're going to do the same thing over here. We're going to go over here, and the settings for gold is going to be, so it's got to be more than $6, which is 60 or 59. Let's do 59 ticks. That's a big range for the Christmas tree label. And the range itself, I want the range itself to be, for a big breakout range, it's got to be like 60. And the minimum range, I really want it to be $3, right? Say okay. And then I'm going to save that, save indicator as gold, which I call GC range. Boom, boom. And then I just simply apply the template, and then, you're good to go, right? So just to kind of just to show you what's going on over here, I'm in this other trade floating around, and it's $42, $43 to the good. And you could take profits here. I actually have, obviously I have a very small position. If you choose to have more than one label, one unit on, you could have you could take half off over here and let it run. And maybe, as I said, maybe this goes to 45 and it's going to be a $200 trade, or maybe it's just going to go back up and we're going to lose all the profits we have. That's the trade-offs you make with this kind of a long trend trade structure. So this is what I'm trying to prepare you mentally. You either kind of have to go for the big home run, as we say in America, or you make a lot of singles like I do. Or you could mix and match by taking a single off the, let's say you do 2 units, which is probably the right way to trade this. You trade 2 units. Once it gets up to like plus 50, you take 1 unit off, and then you let the rest of it run. And if it runs really, really large, you capture a really big move. I'm just going to stay in this thing, good, bad, or indifferent, just to kind of see how far we go, because we do not have a red Christmas tree signal, and only when we get a red Christmas tree signal do we get out of this trade. So hopefully this thing starts to pop and we start to run it, really, really hard. But anyways, this is, if I go to template, I simply put my gold settings on here, and here are the settings for NASDAQ. Into this one, we just put this one, NASDAQ range template, and you can see that it's properly aligned here. And I actually want to go to the different account and try to run it from there. Does that make sense to everybody? Everybody kind of understand the ways to set all of this up? Scott, you can access the indicator by becoming part of my coaching, which, by the way, coaching's this Thursday. I put the link in here. This is the link. You become part of coaching. I also buy you, like right now, I'll be able to buy you 3 free Apex accounts. So I'll start you off with 3 prop accounts if you become part of my coaching. And you get to have it for 6 months. So you're going to be a professional by the time you're done. So that's the way it works. Yankee, you probably don't have the same symbol. You may have a different month. We're all now trading the December month. You may have the September month on your chart. Make sure that it's on September. Make sure that it's on December roll. We're on a December roll, okay? Oh, good job, good job. I'm glad you found it. That's good. That's good. Yeah, you can. The other great thing about being part of coaching is every single coaching session for the last 30, 40 sessions has been recorded, and it's in a archive, so you can watch it on demand anytime you like. And there's a whole bunch of different conversations about how we trade. This is just sort of the most interesting, latest version of it that I think is the easiest, most accessible idea in terms of the ability to give you, to understand how this works without getting too deep into the wonkiness of it all. All right, you know what, guys? We're having such a good time with the gold. Let's just take this. I know the gold could go more, but let's take this trade. It's like $60 to the good, $50 to the good. Let's take this. $50 to the good. Nice job on the gold. We took that trade. Those of you guys who ran it with me, great. It could go $200. I just, the more I think about it, the right way to have traded it, we should have been with 2 units, which is we talk a lot about having a runner. This is the strategy for the runner, right? right? You guys follow me on that? When do you move between months like that, Nathan? This week. The roll happens on the third Thursday of every third month. So in NASDAQ, and I know this is really complicated. The stock index futures trade December, March, June, September. So now we've rolled out of September and going into December. By the way, so here's an example of what we would be doing. We'll do it. I'll do it in this account. Well, why not? I want to show you the structure. Might as well do this. I might as well do this like properly with a 2-unit structure, right? Probably going to get killed on this, but I don't care. So I have a retrace Christmas tree label, right? Boom. I'm selling this market. So I sold 2 units here. I'm not going to take myself out of this trade until I get another green Christmas tree label, right? The assumption here is I'm negative trend, although we all know this is a very stupid trade probably to make because it looks like we bottomed out. But what if we didn't bottom out? What if this is just a pause that refreshes and we start going, we're going to break the 24,500. If we do that, then we're in a great position. We're in a great position, for continuity trade. If we're not, we're not in a great position. But that's the point of how we trade. This is the only way we could have a process-oriented structure. That's great, Deep Sleep. Very nice. Now, your next order of business, if you really want to have a good time, is to join us for coaching. And then I'll buy you a couple of more accounts, and then you'll have the right amount. But you guys seeing what I'm saying? Also, by the way, what time is it? 10:15. If any time between now and 11, we get a red Christmas tree label, that would really be a legitimate, legitimate candidate for our one a day structure. Yeah, you're right. You're right, Evgeny. And and if I was just focusing on gold, I'd probably be trading that all the time. I mean, gold. I let gold go, right, guys? I let gold go because I knew that we let it go at 50, and we could have probably had it. Where were we at? We were in here at 31. It was 90, right? Or 80. We could have had 80 points on gold. I just let it go because what I should have done, I should have had 2 units, given up 1, let the other one just simply float. But the gold is not a sell until we get a red label, right? So if there's when a red label is coming, maybe a red label will be coming here, and it wouldn't be too far away from where we exited. But this was a good example of what I mean about let's enter a long distance trade and just trade it on a long distance basis. Oh, in the meantime, Jesus Christ. Oh, I missed the move here. What was this in 51? Ah, I should have taken the 1 off. I'm sorry, guys. I was fooling around. Still kind of, I'm still working this setup as a structure, but we could have taken 50 points, 20 points on NASDAQ on one of them and just simply let the other one run, which is the way I should have really, really done it. Sorry, I took my eye off the ball on NASDAQ. It's hard to, it's always, you guys know that it's hard for me to focus and teach at the same time. I always fuck it up because you guys ask me questions, I get distracted, and I miss it. But if anybody else who is short NASDAQ, I hope you guys took a little bit off this NASDAQ position and they just let it float now for the rest of it. All right, I got 10 minutes with you guys. Then the Pomeranian is set up for his haircut, which costs literally 5 times what my haircut costs. So I got to go take him. Changing December, NQ is NQZ. Z. If you're in wealth charts, it's you just simply go MNQZ. That's the December, or NQ if you're NQZ. Z is the December symbol. You just pull that up. My Pomeranian has less hair, actually. Bastard, like, got into a fight with a pit bull, and they had to shave him down for a full operation, and the hair never came back. So now he just looks like literally like a little lion. He's got his, face and his paws are the only thing that has hair. That dog has cost me more money than a BMW. I can't tell you how many times I've had to have him in the emergency room for various bullshit reasons. Most of them self-inflicted. Anybody have a Pomeranian? I'm curious. It's a true love-hate relationship. I do not have insurance. You always want insurance after you need it, right? I did not anticipate the freaking dog getting some exotic worm disease that literally nearly put him to death. I didn't anticipate a dog getting into a fight with a pit bull and having me pull him out of a pit bull's mouth. Because my other dogs, which are perfectly normal dogs, have never had any problems. Yes, I have one of those obnoxious little jerks. Right. Always the little dogs have the biggest egos. I will say one thing. That dog, there is no house that I'm in that can ever be broken into. That dog hears shit from a mile away, and he barks like a maniac. Yeah, I don't think this Pomeranian is designed for hunting. I mean, he thinks he's a hunting dog, but he's basically just a lap dog. All right, we're starting to come down a little bit. I have, I'm not vibing a lot here, but the price action is, floating back and forth. The good part about you see the setup is you're just, you're not overthinking it. You're staying with the price action. If the price action cooperates, we get a chance. By the way, just sort of like showing you, I think the MGC created a, no, it did not. I was like, oh, do we have a red label? It did not have a red label. That's kind of cool. But again, and here's the, the drawback of this setup. And this is why having a 2 exit thing, I think, is the smart thing. Because coming in here, we would have been good for 50. Well, now if you get a red label over here, you're only pretty much making 3, right? You would have made only 3 on the exit because it just did not exit out better. It's like a rubber band that kind of snaps back at you, and you have to give it a lot of room to run to the upside, and you have to give it a lot of slack to the downside. It all happens like that, So speaking of this, the first chance we had, we didn't take it. We're at 51. We should probably take 1 at 41, right? And we're gonna take 1 at 41 here to see if we could close out, make a little bit of profit at 41. I don't know if I get a chance to do it. Before I had it, a really good chance. Does lightning strike twice? We'll see. Oh, it took two. Why did it take two? Ah, damn. All right. Well, we took a nice profit, even though we could have, I didn't take the full profit. Today is kind of a story of me taking short-term profits on what are supposed to be the longer-term trades. But regardless, they were good profits. We took a profit here. We took the profit on gold. This is a setup in development as always, and we'll get a lot better at it. I have to figure out how to do single. For some reason, when I moved this up, it moved it to a two exit instead of a one exit. I only wanted one limit. The proper thing would have been to exit at one, just hold the other position, and not get out of it until you get a green label, right? No, Vasil, we sell on the green. You're in a short position, so you sell on the spike. You sell on the spike higher, and then you buy when the price action turns against you, turns green, right? So that's the assumption. No, you wait. The way you would trade a short signal is you sell here, you get out here, you wait for the next red signal to reestablish negative trend, and only when you get a green signal you sell here. We trade 10, 30 points, which is 40, 120 ticks. No, it's not a signal to sell again. Remember, you're in the trade, and the trade is supposed to when you're in a trade, right? It all gets negative, negative, negative. The next green signal is where that trade ends. Like it turns from a negative sell trade to a negative trade. It's guys, I'll have to just kind of show it to you as we go by the week. It's hard. If you don't get it right away, you just have to see it over and over again. But the idea is you're selling on strength and you're buying on strength, because your entry is on strength, assuming that the real trend is to the downside. But then the second signal tells you, no, that trend is changing and you want to go the other way, right? You understand what I'm saying? Those of you guys watching, by the way, it's 10:30. It is the one-a-day trade time. We took the trade over here a little bit early, but if we get a red signal here, that is not a bad trade to do a one-a-day trade right now. Right now, it's just not setting up, but certainly worth a shot. And by the way, look at gold. Gold totally unwound that move. So in a way, so what we have done? We came in, we bought here, and we would have exited here. They would have been essentially flat. We bought here at 32, came out at 33, and that's very much a part of this type of setup. You have to expect it, which is why having a 2-unit structure makes it so much easier, because if you bought here and we sold plus 50 or plus 60 over here, would have locked in at least half on a good move. Markets rarely, the problem with great trend trades is they don't really go like this. They tend to go like this, and that retrace very often will take us out. This is a way at least to stay in that position for as long as possible. But there's always sometime during the day a true trend of continuity, like a really nice big 10, 20 point move trend, and that's the one that we're looking for to capture. As I said, you don't get to be perfect. You just try to get to be good, and then you try to manage it that way. Okay, guys. No trading in the morning tomorrow. You're gonna trade with Kathy. I don't know if I'm gonna be able to join her. I think she's gonna run you through the pre-setups. And tomorrow, FOMC at 2 o'clock, we get together. We'll have fun. We'll see if we get some big moves. That's gonna be a very good test case for a lot of these moves. For a lot of these entries. Evgeny, you're saying two opposite dots. So you would have exited over here at 35. Not much of a difference. 33, 35, you still wouldn't have had, the big move. Now, you came in over here because you did a big reversal trade, but that's not the same thing. That's not something that you could create a process on. You simply bought the reversal and held on to it until it went all the way through. That was much more a proprietary trade. I'm trying to give you guys a formulaic approach. Formulaic approach is always going to have their weaknesses because it's you're fitting it into a lot of different scenarios. But the advantage of that is it's very precise. There's no doubt of when you should enter, when you should. It's a rules-based approach versus a field-based approach, right? So for all of its flaws, this thing made money for us both ways, right? Made money for us on the long side over here, and made money for us for NASDAQ over here. Next time, tomorrow, we'll try to learn how to manage the exits a little bit better. But overall, I'm not complaining. Oh, you got that juicy GC trade? Good for you. Good for you. I'm glad you guys. Who else? Anybody else take that gold trade with me? And did you guys come out at plus 50, plus 60? Were you able to get that big move? I mean, this is not. This is. How did you lose on gold? Even though there was the worst you would have been would have been flat. Then you didn't follow my pattern then. Was there going to be a straddle tomorrow? I don't know. Maybe you guys will do it. So I'm not. I don't really need any more accounts, funded accounts. So I'm not going to be doing the straddle. But if you guys want to, we could do one. Oh, well, you should have gotten out when I got out. Anyways, the good way, I think the right way of trading this is sell half when we have a good profit, and then let the rest float. It's always going to be a learning adventure. Okay, guys, everybody have a good day. I see everybody tomorrow for FOMC, and then we're going to do obviously coaching on Thursday if everybody wants to come in and come hang out with us. So I'll see you guys tomorrow. Everybody enjoy. Thank you. Take care, guys.